Hello and welcome to Business Day TV's Budget Day special. I'm Ntauleng Lechela. Well, it's likely the most anticipated national budget announcement in recent years, and we're just 30 minutes away from hearing it. Finance Minister Enoch Godongwana will take to the podium today after weeks of cabinet deliberations to outline spending priorities and forecast growth. But its tax adjustments will all be waiting to hear about. Specifically, will there be a VAT hike? So joining me to unpack their expectations is Annabel Bishop, Chief Economist at Investec, as well as Isaac Odendaal, Chief Investment Strategist at Old Mutual, and Andre Roux from the Stellenbosch Business School. Thanks so much for joining us this afternoon. Annabel, I'll start off with you. Here we are back to discuss the budget following the delay. As we get started, just, set the tone first. What are some of your expectations the second time around?
Yes, hi. I suppose we've been taught not to have expectations. But I think, in particular, we were told they're looking to raise 60 billion. So I suppose our expectations really are in terms of outlining how they're going to achieve that, if that at all. Perhaps they're going to cut expenditure. We might only be raising 50 billion. Or, exactly what their plan is. But interestingly, the thing about a VAT hike is that you get so much money for it with a small move. Remember, they look to raise that for 60 billion from a 2% VAT hike. And of course, now the discussion is, will there be a 1% hike or a 0.5%? But the backdrop I think you're looking for as well is that we're obviously in a weak economic growth environment. In fact, economic growth slowed last year to 0.6% from 0.7% in 2023. Looking forwards, of course, there are worries that in a weak economic growth environment, of course, it's been experienced already, your tax revenues disappoint. And the risk, of course, is, as our SARS commissioner has said, and of course also others have said in government, when you hike taxes, that can slow the economy more. So I'm expecting, and again, you could stand to be badly disappointed, but I'm certainly expecting to see a situation where perhaps we raise revenue from different sources. Perhaps they start to use the fuel levy now. The VAT increase might be smaller. It obviously is still a bone of contention, and, obviously much remains to see whether the budget is passed in Parliament. But of course, let's not forget that expenditure cuts are crucial. And of course, as the SARS Commissioner said, Edward Kieswetter, 800 billion can be raised. If, of course, we widen the tax net enough, it's a very important point because in the 2000s, SARS was collecting enough tax, not only to result in actually some tax cuts and debt buybacks, but also, of course, those stimulated the economy and it created a virtuous cycle. And of course, eventually we found ourselves growing at economic growth rate of 5%. So that's such an important point the SARS Commissioner makes. 800 billion versus the 60 billion they're trying to raise. It's better for us to bolster SARS and be in line eventually for some tax cuts and stronger growth.
So a tough balancing act for the minister then. Isaac, really unprecedented times here. The first time this has happened, this delay has happened in democratic South Africa. What are you looking to hear from the minister this afternoon?
Yeah, I think the main thing, the two things, there's obviously a lot of detail that's going to go into the budget and that they'll present, and it's hundreds of pages of detail. But there's sort of two overarching themes that are, I think, important. The first, as Annabel alluded to, this economy needs to grow faster.
Yes. And
really we need that emphasis on accelerating growth. We need reforms to accelerate growth, and I expect those to be highlighted by the budget and hopefully detailed in the budget. Of course, not everything sits within the ambit of National Treasury. In fact, most of the growth obstacles actually sit underneath other government departments. But as long as the emphasis is there to speed up economic growth and really roll back the obstacles to faster economic growth, I think that's crucial because it solves a lot of problems, including the fiscal deficit. And then my second key thing is that, again, whatever the mix of spending and taxation you come up with, I think it's crucial that we don't borrow more. We already have too much debt. Our debt compounds very quickly because we borrow at very high interest rates. We're already spending more than 20 cents on each tax rand that we collect goes towards interest payments, and it's just that number is just increasing. So I think it's that combination of fiscal consolidation, and fiscal consolidation is unfortunately negative for economic growth. That's the sad reality. So we need to do that, but then we need to combine that with other measures to stimulate economic growth.
And you know, their way of stimulating economic growth was to double down on revenue, with that VAT hike being really contended. Andre, do you expect this to still be contended? Could we possibly see a smaller VAT hike? Could we possibly not see a VAT hike at all?
Yeah, hello, Annabelle and Isak have said all the nice, juicy things, which I can only concur with. Just to perhaps I've made just a link onto what Isak has been saying, and Annabelle, it's crucial that we don't fall into the trap of incurring more debt to solve the so-called problem, to plug the gap. We saw from the non-red budget speech a couple of weeks ago and earlier speeches that they want to anchor their expectations in terms of having a primary surplus. In other words, that the difference between tax revenue and expenditure, excluding interest, should be positive. I think that is crucial if we really want to bring down or at least stabilize the overall level of government debt. So given that, then, we go back to the 60 billion rand that has to be plugged, the gap that has to be plugged, and assuming there's going to be rather difficult to cut back on spending on civil servants, a 5.5% wage increase has been promised. I don't think it will be politically wise to reduce or not to slightly increase the distress relief fund. We want to retain our doctors and teachers. So I quite agree that, as ideal as it would be to cut back on spending, it will have to be in the form of trying to combat or eliminate unwarranted and fruitless spending. I think the point about the commissioner saying there's so much more that he and his team could collect is an important one. It's a crucial one. As Annabelle said, 20-odd years ago, SARS was highly professional, very efficient. If we can return to that, that would be great. Which then brings us to how big is the gap going to be? Will it still be 60 billion? And if so, how they're going to plug it. I see in recent media reports, they're still talking about a possible VAT increase of 0.5%, even 0.75 percentage point. That sounds very uncomfortable and very clumsy to me, but anyway, maybe 0.5 percentage point. It's obviously been a matter of compromise. The fuel tax in the original budget was not going to be raised, as quite rightly pointed out, a very convenient way of raising a few more billion. They seem to be fairly adamant about not raising corporate tax rate, not wanting to deter investment, not wanting to raise individual tax rates, although they might be very clever and not make a big accommodation for fiscal drag, and that way kind of indirectly, sneakily generate more tax. But the bottom line is, I agree with Isak and Annabelle that we are looking for more growth. The growth climate now is very sluggish. And by the way, we need to also consider the potential additional demands on the fiscus with the cancelling of the aid from Mr. Trump regarding PEPFAR and HIV and AIDS treatment. The growth climate not very great. We're not going to get organic growth in tax revenue. So one hopes that he doesn't go overboard, but we're going to have to find some. Maybe he can raise the sin taxes a bit more than he initially thought. You know, normally he raises those, and there's a polite titter to the audience. We kind of accept that. He could, I suppose, we don't know, he could resort to what he did last year in terms of that contingency, foreign exchange contingency fund. There might still be money there. Who knows, in desperation, he might resort to that. But really, it is a matter of compromise. There's no good solution to all of this. It's a matter of looking at all the considerations and deciding which one is the least evil of the lot.
And I want to zoom into that, the possibility of a VAT hike, well, perhaps a 0.5 percentage point increase in VAT. Is it really sustainable? I know in the first draft of the budget, it did mention that in an attempt to cushion consumers, Treasury is planning on adding more items on the zero-rated list and also just increasing social grants. But is it really sustainable considering the amount of pressure households are under? I'll give that to you, Annabelle.
Hi, yes. We actually looked at that proposed 2% hike in VAT, and what it would have done was would have added 1% to inflation. And of course, if you're sitting at 3.5% for the year, perhaps that's why the finance minister wasn't keen to lower the inflation target band when we looked at the MTBPS, because it would have brought our inflation rate to about 4.5% anyway with that 2% VAT hike. Of course, we know it didn't go ahead. But the point really is now we find ourselves in a situation of maybe 0.5% VAT hike. And, you might say, oh, golly, that's going to add 0.25% to CPI inflation. So not too much there. I think consumers would actually be able to stomach that. And I think, that's really where we find ourselves at the moment. Perhaps, what's really key is cutting back on expenditure. I think it was perhaps the DA that might have said they want a review of all expenditure in South Africa to make sure it's efficient, but also maybe, trying to protect critical expenditure such as the social wage, social welfare grants, free basic services. That's critical expenditure. By cutting back on non-critical expenditure, now we would argue teachers and police are critical expenditure too. But of course, when you look at the very hefty top layer of government and the huge cost, whether it's deputy ministers, deputy director generals, but also, of course, as well, the extremely high travel and other luxuries and perks, those can be cut back on quite substantially. And in fact, a calculation has been made whereby cutting back on 50% of that and perhaps letting the ministers drive a car that's a few years old instead could actually save the 60 billion. But of course, as well, cutting back on advertising, a few other areas. I really do think it needs to be a balance. We can't just look at raising taxes. You have to give something back. And for the consumer in South Africa, that means cutting back government spending. Lastly, of course, we don't want to get into an environment where we have higher debt. It can lead to credit rating downgrades. But of course, we're sitting in a situation as well where we are already paying a lot to service this debt. If we can raise that extra 800 billion from bolstering SARS reserves, so it's no longer hollowed out as it was under state capture, but finds itself back in the situation where it can fully run its large business unit, for example, then we could actually reduce our debt servicing costs by having less debt. And that could put you up into higher credit ratings. You could get investment grade back that could strengthen the rand. And so you'd fall into a virtuous cycle. Sadly, hiking taxes in a slow and weakening economy turns to actually as a negative cycle for the economy. It can actually exacerbate the situation and make it worse.
How concerned are you about the back and forth we've been seeing within the GNU that initially led to the delay of the budget? And how confident are you that, the budget will be tabled today?
Yeah, good question. Well, I think obviously the previous debacle wasn't very well managed. It was a very bad PR exercise. But, in a strange way, I think the fact that we did see opposition from within the coalition is technically potentially a sign of a more mature coalition we might have thought not too long ago. If they can overcome this obstacle, this hurdle, and come out, out of all of this still rather friendly on the same side, as it were, I think that augurs well for the market sentiment. The fact that even after that debacle, that the markets didn't crash, the rand didn't crash, is perhaps also epitomizing this, that markets see this internal resistance as being a sign of a healthy alliance, and not just a bunch of people all agreeing on the same principle just for the sake of it. Will it happen this afternoon? One certainly hopes so. One would imagine there'd be lots of compromises. And what is it now? 10 minutes to go, 15 minutes to go. I haven't done anything yet. I think they realize not reading the budget this afternoon would be too high a price to pay. It would be just one step too far. So I'm sure it will be read. I think another interesting issue, however, is going forward. This budget has to be debated in Parliament, and Parliament has to pass it. Now, that'll be interesting to see what kind of interesting bedfellows, unlikely bedfellows might emerge, who might, who knows, vote against the passing of the budget.
And you mentioned something interesting there around how equities and the rand weren't punished as much after the budget was delayed. And I want to bring it to you then, Isak. I mean, worst case scenario here is the budget isn't tabled, right? If that's the case, do you expect to see then those equities and the rand perhaps being punished a bit more?
Yeah, I think the market would respond negatively to another postponement of the budget. But bear in mind, we're in a very, very unstable international environment,
Yeah.
and I think the performance of our markets need to be judged against the backdrop of what's happening internationally. So, for instance, we've seen actually over the last couple of weeks since the first aborted budget, we've seen the rand strengthen, and that really has nothing to do with what's happened in South Africa. It's because of a weaker US dollar, because of growth concerns in the US. So there's always an international backdrop to consider. And in fact, while the budget is being tabled, we will have a very important American inflation release, and that's going to give guidance to the markets around US interest rate expectations, and again potentially impacting the dollar. So I think the market reaction is also going to be perhaps slightly more difficult to read this time around. But there's no question the market wants to see South Africa kind of deliver a credible budget. I don't think the first kind of postponement of the budget was a train smash from a market point of view. I think what ultimately matters is the context, the content of the budget. Are we doing the right things to stimulate growth and to narrow the budget deficit? I think also, like the politicians in the GNU have to get used to coalition politics and perhaps a slightly different approach to managing the budget process. I think investors will also get used to a slightly different approach when it comes to tabling these budgets in a coalition environment, because of course it used to function like clockwork when the ANC still had a majority, but now it's a coalition. And if you look at other countries, there's always a little bit of drama around budgets.
And one of the most important aspects that you mentioned, Annabelle, and I think everyone mentioned this, was to just boost growth. And while we've seen, these economic reforms underway, we've seen, reliable energy supply at Eskom, but we still have those port issues still at play. Do you expect the minister to maybe take a less tough love approach when it comes to SOEs this time around, Annabelle?
The interesting thing about SOEs, and of course, where it's important for National Treasury, is that government guarantees quite a bit of their debt.
Yeah.
State guaranteed debt. The interesting thing is that the credit rating agencies already assess South Africa's government debt by including the debt of the Transnet, Eskom, etc., that is guaranteed by government. So it won't make much difference from a credit rating perspective, a market perspective. It's really seen as being part of a parcel. The problem that we found is obviously Eskom has had a lot of debt alleviation. It had more debt guaranteed by government. Transnet has less guaranteed by government, but Transnet is also in a debt crisis, also in a debt problem. And in fact, the big problem for us for GDP growth in South Africa, the presidency themselves mentions it, that South Africa loses about up to 4% GDP growth by having Transnet not functioning sufficiently. And by that, we're talking about railroads, we're talking about the ports, we're talking about freight in general. Why it's so important is if you're a mining house, if you're a mining producer, you can't produce all the minerals you wish to and export them. And of course, that then has a negative impact on mining production, but also on South Africa's exports. Let's not forget the negative effect on state revenues from customs, certainly when they come in, but when they go out from the revenues earned. But overall, we find ourselves in a difficult situation where you just can't repair something like Transnet immediately, overnight, quickly. Eskom, we managed to reduce load shedding quite quickly for different reasons. Transnet, however, has got huge infrastructure replacements that are needed, all sorts of areas, actually a much bigger operation. And of course, what we are hoping to see is a bit of support for Transnet. Yes, it's good to hear that independent operators might come on the rails, the ports, etc. The question that the markets have, that the private sector has, is who's going to maintain the port and rail infrastructure? Are the monies that they pay going to be used to keep the railway system functioning well, keep it upgraded, stop the theft of even sleepers on the lines and the tracks? I mean, what sort of environment are they actually going to operate in? So these are all interesting points. We, of course, have seen government a bit slow on the PPPs and, of course, on the regulatory issues as well. And I would say we probably lost a year of growth in that regard. We probably don't think it's going to be something quickly resolved this year. And we've actually recently downgraded our GDP growth forecast, to get back to your point. And, we were looking at about 1.8% for this year. I think the Bloomberg consensus is 1.7%. We're now looking for 1.3%. Not just because the base is quite low, we start the year off, but for other problems you mentioned, the risk is that it even drops lower than that. These are real issues for South Africa, that we just are in such a weak growth environment.
And let's get your take around that, Isaac, around just, growth and everything that's been happening at our SOEs and how government has actually been trying to shake things up, but that, of course, being quite slow.
It's a process, and it's a process that faces numerous challenges. Some of them are legislative. These SOEs each have their own enabling act. Some of them are political. There's a lot of opposition to reform at SOEs. There's a lot of internal opposition, obviously unions, suppliers, criminal syndicates that have been kind of feasting off these SOEs. So it is a challenge, and I agree with Annabelle that it's not going to happen. It's not going to happen immediately. I think we can be more aggressive in the sense of, pushing these SOEs to dispose of non-core assets, for instance, and certainly speeding up the process of private sector participation. I mean, I think we can speed that up, and again, that's something that we hopefully see coming through quite forcefully this afternoon. But it is going to take time. I mean, you don't fix an entire country's railway system overnight, and certainly with Eskom, it also didn't happen immediately. We still had to go through quite a dark place. No pun intended, before we got to a situation where actually you have operational improvement at Eskom, but also we have sufficient private sector generation to kind of offset, Eskom not running at full capacity. And indeed, there's still a lot of private sector generation going to come online in the years ahead. So that's also an ongoing process. And then we also haven't even started talking about water yet. I mean, when it comes to water, we're still very much in the early days of similarly allowing private sector investment into bulk water provision. And again, that's going to run in the years ahead.
So reform is really important, and getting that up to speed also really, really important. I want to talk about the expense line for a bit with you, Andre, and how much the minister has room to cut these expenses. I mean, expenses. We talked about how ministers should cut down in terms of spending in cabinet, from cars to houses, etc., etc. I think of, other departments that essentially need the money, the extra funds, including, let's say, the security division, the defense division, following the fallout we've seen in the DRC. We also touched on the health sector, considering that we've lost out on funding from the US.
Yes, well, I don't have intimate detail of each department's line spending, but I think Annabelle made the point as well a bit earlier that we need to cut back or even eliminate non-essential spending, non-critical spending. Now, what is that? That's in the eye of the beholder. But sort of going back as well to Isaac's comment and observations about infrastructure spending, it seems to me that roughly, every year the minister seems to announce triumphantly, we're going to spend over the next 3 years close to R1 trillion on infrastructure spending. But I don't think we ever spend all of that. So, just as much as overspending is an awful sin, underspending, to me, is just as unacceptable. So that kind of implies that some allocations are made which are not spent. So we need to look at that as well. And I think Annabelle referred to the fact that DA is demanding or requiring or requesting an expenditure review. I think that'll be very important. In fact, that might be a quid pro quo in exchange for perhaps a small increase in the VAT rate. But there's bound to be savings possible. There must be. I think we all know, we can all speak from experience or our own war stories, that so many budgets are not spent until maybe the last 2 weeks in February, and then suddenly what's ever left, they just spend irrationally and ridiculously. We need to cut back on that. We really need to slim down unnecessary spending. If I can make one last point, one hopes that this afternoon the minister's budget and his delivery will be less tone deaf than the previous one. He didn't read the speech, but we've all read the speech.
Yeah.
At one stage, he makes the point, after considering everything, we decided to raise the VAT rate by 2 percentage points to enable us to finance civil servant salary increases. I mean, how tone deaf can you be? How untactful can you be? Now, fortunately, that wasn't read out in public, but if that's going to be the tone of voice, as it were, then it's not going to be very popular.
Unfortunately, we have to leave it there. We've run out of time, but you've ended it on a really perfect note there, Andre. That was Andre Roux from Stellenbosch Business School, Annabelle Bishop from Investec, and Isak Odendaal from Old Mutual Wealth. And that's where we leave things with you. We'll be crossing over to the Minister in just a bit.